Mark Matthews of Bank Julius Baer and Company is now joining us with what he's making of things. Mark, it's been a while. Thank you very much for being on the program. Good morning. Equity flows into India, FI flows into India, very, very strong. I think in May so far, we've seen a very large number, a couple of $1 billion. What's your sense? What's going on? Is India back on the radar, top of the list, or not really? Your sense?
It's not. So I don't know why that's happening. I have no problem with it. I've been bullish on India for a while. But the market in Asia, everybody's talking about is Japan. And in yen terms, the Nikkei is up, I think, almost 18%. And in dollar terms, it's up in the mid-teens. So that's the market in Asia that people are interested in right now. Basically, it's a combination of Warren Buffett having visited the country last month and the idea that the Bank of Japan will be lifting their yield curve control, and that wages have grown the most since 1992. So India is not on the radar screen, and I'm delighted to hear that it is getting some inflows. I didn't know that.
It's actually been 14 days or 14, 15 days now that foreign investors have been buying into the Indian markets. Mark, good morning. What do you think what would it take for India to get back on the investors' radar? I mean, things are picking up, earnings are looking good, buying has come back. Then why are we lagging behind? Is it purely because of the valuation argument that some of these markets like Japan are looking attractive?
I don't know, but my sense is that people like Japan because it has these globally recognized brands like Sony, Nintendo, Toshiba. India doesn't really have that. So there's a comfort factor. It's a developed market. It's enormous. It's the third largest market in the world. And it has a very undervalued currency. So it all fits together right now. India, I think, unfortunately, is a little bit tarred by the emerging market brush and what has happened in China. And of course, we know there couldn't be two more different countries. But if you're on the other side of the world in New York or London, you don't know that. And you just think that emerging markets are risky. And case in point, look what happened to China.
Hi, Mark. Good morning. Mark, what about the debt ceiling? You're getting positive commentary overnight from Mr. McCarthy as well as from President Biden. Do you think that's going to be done? I mean, the markets were worried, maybe unnecessarily, because we see it on a year-to-year basis. That's the first part. And banking crisis, will it come about in the United States? Or do you think that regional bank issue is sorted, not too big to worry?
Yes, I think both are not issues that we should lose sleep over. I listened in on what Speaker McCarthy said in your interview, and I agree entirely that Joe Biden is very good at negotiating. That's what he built his career on. So he's decided to do it after he said he wouldn't do it with the Republicans. And so I think we will have a deal, and we always would have had a deal. We know that. And the worst case scenario is he would have invoked this archaic Amendment 14, which says that the U.S. shall never default on its debt. So anyway, yeah, I don't think the debt ceiling is an issue. And then with the banks, we have actually done a screen ourselves and identified 6 banks that do have weaknesses for one reason or another. They're not all the same reason. It could be they have a lot of commercial real estate exposure. It could be that their capital adequacy ratios are too low. Anyway, there's 6 of them, and only one of those has assets in excess of $100 billion. To put that in perspective, both Silicon Valley Bank and First Republic had assets in the mid 400 billions. So this is something that I don't think will become systemic, and I'm not saying it's going to be easy for the smaller banks because their deposit rates are still far lower than money market rates. So there will be probably a slow ebbing of deposits away from them, and they have lent a lot to commercial real estate. But we don't think that is a big enough problem to drag the entire economy into a recession, or certainly not the stock market, which of course seems to be much more focused on technology and artificial intelligence than worrying about commercial real estate.
Got it. Mark, the other thing is what the dollar is doing, right? It seems to be there seems to be a sense building up that maybe the dollar's got a little bit more business on the upside. But the rupee has been remarkably well behaved against the dollar. Trade deficit numbers, strong FPI inflows are just two factors which I can cite. What is your sense? If the dollar were to rise, a few percentage points from here, will that mean trouble for Asian emerging markets? What's your sense?
Not trouble, but traditionally, you're right in saying that the dollar, when it rises, has been a headwind for Asian markets because Asia tends to borrow a lot in dollars, and therefore the cost of that financing goes up. I wouldn't worry about it too much. Currencies are the hardest thing to call, and so I would have said the dollar should go down because they've finished raising their interest rates, whereas the Europeans are going to have to keep raising theirs. The Japanese are going to lift yield curve control. Purely based on that, I would have thought the dollar would go down, and now you can see the opposite's happening. So I don't know, maybe people just got too bearish on it. I wouldn't actually be too bearish on the dollar. I think it does seem to be bottoming out here, but I see no real reason why it should skyrocket higher either.
Okay, you want to leave us with, since you continue to be bullish on the Indian markets and optimistic here, you want to leave us with any preferences, any spaces that you like, banks, autos? Rate sensitives have been doing quite well. Do you think technology will come back on the radar?
Well, I'm going to be very lazy and say I agree with all three. Banks, automotive, and IT. Why not? I mean, they all make sense. Artificial intelligence is going to be as big as the internet. And for sure, your IT companies will be just as much beneficiaries of those as the IT companies in the United States. The automotive, it's very clear, is going gangbusters in India, and there's so much room for more growth there. And banks are the heart of any economy, and the Indian economy, I think, will more than double in size over the next few years. So those all make sense.
Okay. All right, Mark, we'll leave it at that. Thanks a lot for joining in. So that's the global perspective. Bank Julius Baer saying that the U.S. rarely defaults on its debt. So that doesn't seem to be a bit of a concern at the moment. But the market that everyone likes right now is Japan. And Japan, in any case, has been hitting 52-week highs.